David.
Another episode of Suburb Tracker. We're in Yarraville, just around the corner from Anderson Street, which is a really lovely retail shopping precinct. We just had a coffee there earlier.
Cute little village, the corner store.
Out the front of a classic sort of double front weatherboard.
Yep.
Describe it. Yeah.
Victorian weatherboard.
Describe Yarraville for people watching around the country, just briefly.
It's about 6 kilometres west of the CBD, Melbourne CBD. So it's typically a working class suburb that's now going through rapid gentrification. So a lot of character houses through here, real village type feel.
Yeah.
A lot of younger families moving in, renovating, extending, etc. So it's really on the up.
And there's obviously a station which is right next to the main strip of shopping. How quickly can you get into the city?
Within about 10 minutes, 10-15 minutes.
10-15 minutes on the train. Okay. That's good. Now let's talk about the financials, where it is in the cycle, whether we buy there, whether we not buy there. Peak of the markets right now. Well, sorry, it's at all-time highs right now.
It is. It's 54% up since its last peak back in 2010.
Yes.
So the median's gone from 680,000 to 987,000.
Yes.
So it's quite solid growth.
Yeah.
I'd probably put
I'd be happy with that.
It's probably halfway through its growth cycle.
Yep.
What's really interesting is speaking to a lot of agents on the ground, they're finding that probably 60 to 70% of their buyer inquiry is actually coming from the eastern suburbs now. So
people who have been priced out maybe of Richmond or Collingwood,
Hawthorn,
South Yarra,
Camberwell, Surrey Hills, etc.
Yeah. And I noticed the average hits per property is pretty strong.
Very strong, 1,400 hits per property.
Yeah.
I think the Victorian average is around 600. So
yeah, and so you'll find that most of the inner city suburbs and most of the suburbs, when they get fully priced, will be back down around that 500 visits because the demand's come out of the market because it's become too expensive. But Yarraville is still showing that it's probably on the up and up. Still a lot of demand, still a lot of people who can afford those prices.
Exactly.
Right?
Yeah.
I think the other interesting story is the vacancy rate.
Vacancy rates, very, very tight, which is exciting for investors. 0.9%. Again, the balanced market's around 2.5%, so not a lot of stock. So we're starting to see some rental growth, which is good.
Which is as low as you'd see on the vacancy rate.
Yeah, that's as tight as you get around the country.
And the important thing is it's on a downward trend, so it still looks like it's going down, so that's going to be great for rents. Mm-hmm. Rents should rise, and if you own a property in Yarraville, you know, your yields are going to improve, assuming the prices don't jump up faster than the rise in rents.
That's right.
So, Heath, would you buy in Yarraville?
Absolutely.
Would you buy in Yarraville right now?
Absolutely. I think it's only halfway through its cycle. You've got to take a long-term view and make sure you're buying the right asset. But there's really solid fundamentals for Yarraville.
Excellent. Thanks for joining us.
No problem.
Cheers.
Thanks, David.